Hello, warriors. Hello, gladiators. How are you? Everyone put on their war face and face. You're in the arena now. Give me a Y if you have your war face on. Everyone have their war face on? Okay, I also have a special treat for you guys today. Well, you could call it a treat. I'm going to call it a gift. Hi, Brooks. How are you? Hi, Clayton. So what I'm going to do is I have a real-time example. Hi, Tim. Of a 3-drive to a bottom formation. I started monitoring WTI. Hello, Alex. After Stelios gave his, we had a discussion the other day about the fundamental reason to be long crude. So I see some technical setting up. I'm going to go through it. How many are familiar with my work of 3 drives? Blake says he never asked for numbers, but give me an idea of how many already know it. Not yet? Okay, David. Well, in fact, give me an N if you're not familiar with the 3-drive to a top, 3-drive to a bottom formation in combination with RSI for setups. It's a nice little methodology that I've become known for, and we have a live example of it occurring right now in crude. Okay, Toby. But before we get going, there's something that I haven't reminded FACE members of for a while, and I really want everyone to avoid being right the market, wrong the trade, and the only way to do that is to reduce leverage and let your trades breathe. Let's all learn to let our trades breathe and not have, 20 pip stops and 30 pip stops, and on any little hiccup by a black box or algo, you're taken out of the trade because you have too much leverage on. You have to be able to be wrong for a day. If you notice on ForexAnalytix, okay, they give their setups a chance to work. Okay, you have to give the market room to breathe, to be there. I have an expression: if you can't be wrong for a day, how can you be right for a week, right? So at least the average trading range, and then after volatility picks up like it did in the euro yesterday, you even have to reduce leverage a bit more. So this is a hypnotic song that you will play in your head over and over again. Some have said to the point that they can't get it out of their head, it drives them a little crazy. Use less leverage when you trade the market. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage. Use less leverage. Use less leverage. Okay, you've all been hypnotized. So, who promises to use less leverage? I'm sorry if that song is not. Hi, Tamir, how are you? Yuri? So it's hypnotic. You're going to find it a valuable lesson. You're going to trade more successfully when you, don't try and hit home run balls. It's baseball season. And the guys that hit the most home runs in baseball strike out. But they can afford to strike out. We can't.
Dale,
don't give up your daydream. You've got it wrong, Kevin. Don't give up your daydream. Not day job, your daydream. So
Dale,
yesterday, who was that, Blake?
Yeah, I'm going to use less leverage just to make sure you don't sing that song again.
All right. I want it in writing, so go pick up some ink. All right, buddy?
Just harassing you.
I know, but yeah, it is a big problem. So,
Oh.
I want to get your thoughts here in a minute, Blake. Yesterday, I walked in here, and we had the big gaps in the euro. And I was saying, because of precious metal weakness, my suggestion was shorting Aussie and shorting Kiwi because of the weakness in metals. And I said Kiwi would most likely be weaker because Aussie Kiwi to the upside is working. So I hope that this analysis helped a few people here.
Great analysis, Dale. Although I didn't have much of an opinion on the Aussie and the Kiwi, but that was overall really great analysis. And it was simple correlation work, Blake. You know, I mean, it's like one of the first things that comes to mind. You know, I like do an overview of the market, and I know you do it too. You look at what's strong, you look at what's weak, and then you look at the correlated pairs, and they are pretty good market messages. They are, and correlations, you know, correlations will break, and you know how I like to trade correlations the most, and I use them in every facet of my trading, is when correlations look like they're divergent or they're starting to converge again. So when correlations are working, that's great, but they don't always work. And so when one of the cues that I try to pick up on when I'm trading is, okay, we have correlations that have been working, but then they start to diverge. Once they start to diverge and they start to break down a little bit, then I can use that to cue off of other decisions. So, but this is a good example of when correlations are working, and the Aussie and the Kiwi really underperformed the rest of the dollar dollar pairs. So that was you know, the dollar really outperformed against them and underperformed against the euro and the pound. So really great work on for you. No, I'm not saying for you, but on you. You did a great job. So
thanks, buddy.
Hey,
what are you thinking? Go ahead.
You know, well, first of all, I just want to give you some quick thoughts because I'm going to my son's school. This is our last Donuts with Dad that I get to go to because, well, frankly, he's just too old. Then next year they don't do them, and my other son doesn't do them anymore. So I'm going to savor in it today.
Yeah, you know what? Good for you, Blake. You know, because the Aussie and the Euro and the S&Ps, you know, they're all going to be here. But you're right. You know, going to be with your son, it's a ritual for you too, and it's a better memory than being up 100 pips. So
yeah,
good for you, man.
Thank you very much. And I wanted to cover just a couple of things really fast because I've taken down here. I'm just going to take over really quick because I'm not going to be here too long.
Yeah, I heard you went to the door on some of the pound crosses and booked some stuff. Huh?
I booked them all. Well, the problem, and for those of you that have been following kind of what I've been doing, I'm short the euro pound, and I was short going into Sunday. And, you know, you might think, oh, ouch. Yeah, I mean, you know, I gave away profits. Oh, hell, hold on one second. Let me get over to my right. There I am. Okay. So, I gave away some of my profits because I've been short since like right around here, like 84.50 is my cost average. We were dropping in the last week. We spiked back up. I gave back all my profits, and then I'm underwater, and I'm sitting here going, okay, well, you know, it hasn't stopped me out. Fortunately, well, I say fortunately right now, but you know, who knows? I mean, we may still continue higher towards the 618. I'm hoping we don't get all the way up to 86 pence, but I'm expecting maybe a move back up here. Anyway, regardless, I'm underwater in the euro pound, and it was very frustrating because I'm like, you know, I should have just closed it out ahead of the elections, but there was more of a hedge just in case, you know, just in case that there were some unforeseen events. Anyway. As you pointed out, the Aussie and the Kiwi are underperforming, and so what I have been long
very aggressively is I've been long the pound New Zealand, and we've been talking about adding to it, hanging on to it. You know, we've been walking through this trade for the last couple of weeks, and before we started the FACE webinars, I'd already been long the pound New Zealand. I was long from like the 173 level in the pound New Zealand. So we're up.
You know what a lot of discipline it is. I mean, I want everyone to look at this chart and look at all the drawdowns or give up of profits that during this position Blake has the temperament to do. I have a hard time doing that if I know there's going to be, you know, perhaps I'm going to give back a couple hundred pips to hold the position. One of the hardest things to do, and so, you know, kudos to being able to, you know, be okay with giving up profits, looking for more profits. It's one of the most difficult trading skills to develop, in my opinion.
Thank you very much.
Good morning, Blake here. Just 5 seconds. It's exactly what we were talking about, the mental attributes yesterday, Dale. I don't think Blake was here, but that's what we were talking about.
Yeah, you could analyze it, but having the temperament, you could have a, you know, I had a guy who once said to me, I'm a little better at it now, Blake, than I was 15 years ago. He would say, Dale, why do you even give your target? Because you're never there for it, and 80% of them get there. Okay, because I don't have the emotional temperament to do that. So go ahead, Steve. You know, it takes a long time to develop that, doesn't it?
No, I didn't want to interrupt. Just saying that, you know, this is one of the mental attributes that are extremely important to be able to become a successful trader, and Blake definitely has that. I mean, I'm talking from experience. He's my friend now for years, and you know, I've seen him position himself in and out, and you know, some of the times it needs, you know, what we.
How about you, Steve? How about you, Steve? Do you have patience to be able to sit through things like that, to ride to targets like that?
No, I don't have the mental capacity that Blake has. And how do you bypass your weaknesses like this one? By being a longer-term trader. So, for example, I don't have the capacity to go through the swings as Blake does. So my trading is more longer-term than he is, and this way you can bypass this. And how do you do that? Exactly as you mentioned in your song, by using less leverage and looking more at the bigger picture. That's why I said yesterday that it's imperative for everybody to find their own trading style.
Yeah, Blake, I physically have to walk away from the screen sometimes.
It's tough, especially when you know, I'm a very active trader as well, but there's certain times and certain situations that I try to position myself, and thank you, Steve, for all the kind words. It just, you know,
only honest words.
Thank you.
Steve, I think we have quite the bromance going here between Bulgy and you, Blake.
Well,
you know, I hope that he doesn't. I hope he doesn't get jealous when you and I become close, Blake. You think Steve can handle it?
I don't know if he can handle it. Hey, really quick, because I really do have to go, guys.
The donuts are getting stale.
Well, I've got to actually take a shower before I go. It's not fair to all the other if I don't, and the other parents that have to smell me. But just one of the things that I want you to notice, because this is one thing that Dale, you said in particular, as we were here last time, and this is last week, we were right here. You said, hey, Blake, we hit highs in relative strength, so it confirmed that move. That's correct. This last move, we didn't. Okay, and so I knew at this point, if I'm going to book some profits, I'm going to do it here. And then that just took me to my pound Aussie. Same thing. We rallied to new highs. RSI is really starting to lag. Pound Canadian, same thing. We rallied to new highs. RSI is very lagging here. We also hit.
Usually takes a couple for it to top, but that's definitely. I teach that the first divergence is not a reason to reverse and get short, but it's a reason to be booking longs because of the non-confirmation. Great.
You know,
great.
Thank you. And I may be wrong here. And don't, just because I got out doesn't mean that
It won't keep going.
No, and I have to be honest, I'm also trading my P&L a little bit too, because of the weekend, I took losses overall because of the pound underperforming the euro, and the pound was actually underperforming the, you know, just like these other crosses you can see yesterday. You know, we were just kind of hovering around here yesterday, and you can go, that was a pound Canadian, pound Aussie, we were down here, pound New Zealand, we were down here. So I'm using this opportunity to kind of book some profits, and so I am trading my P&L, and sometimes I do that. So you guys, you know, a lot of people don't understand this, but when you trade on a, you know, on a quarterly or a monthly basis, and for me, I trade on a quarterly basis, but I really look at months. When I get towards month end, I start to be very careful about my P&L, because I want to make sure that I keep positive months back to back to back to back, as I, you know, I get compensated on a quarterly basis. So I try to make sure that my months are always positive, so I can go into the end of the quarter, you know, really strong. And this was a situation where yesterday, or, you know, over the weekend, took some of my profits. I had to reposition myself from a P&L standpoint today. Those are things that, you know, as an independent trader, you may not think about as much, but, you know, it depends, again, it depends how you're compensated, what you do for a living, you know, how you trade for a living, that type of thing. But I just wanted to kind of brief you guys on that. I'm actually still short the euro pound. I am, you know, hoping we move lower, but I'm not ignorant to the fact that the daily candle also left us a nice little dragonfly doji, which could still yield some upside. So I am very well aware of that.
You know what I say about hope, Blake? And I'm not saying that I don't and everyone else does, but
it floats.
Hope is the oxygen in our life and the carbon dioxide in our trading.
There we go. So somebody doesn't choke it off, but that's good. That's good.
Like
it's good way to think. I do. I like that. Hey,
Yeah.
one last thing, guys. Today is Tuesday. A lot of times during these types of situations where you have a bounce in risk, we had a nice event risk over the weekend. Stocks are higher. DAX is breaking out. The stupid S&P actually closed me out of a pattern in play. You know, for those of you that use ForexAnalytix here, we got past the you know, we got past my threshold on the S&P, but you know, this actually right here, frankly, and I'm not a harmonics king by any chance.
Well, look at the RSI. So what, you know?
Yeah, it's very divergent.
It's the last high was confirmed, and we moved sideways and time. So it looks like we're going to blow off to new highs here, and we'll have our first divergence maybe under 70 or so.
Yeah, you know, and one of the other things is we could set up for a Gartley pattern, and I guess the point I'm trying to make is we rallied yesterday pretty hard. Today you'll get that follow-up push in the morning. I would be more concerned about turnaround Tuesday on a day like today than anything. And then you got gold. By the way, gold is heavy, but we're also approaching a pretty strong support zone. So, you know, when you got a couple of things coming into play, the markets have been strong. We're at new highs, you know, and like the DAX and the S&P is making its way higher. Just
gold looks like 1180 coming, buddy. In my Mr. Pinkert saying 1180 gold coming.
Okay, well, I think we should keep an eye on it here because this is strong support. I think if we can get through all this 1260, I think that might actually happen.
Yeah.
But it is early. And remember, if it's Tuesday, we start to see some poor price action at the end of the day, where, you know, equities start to give back some of the recent gains. You might see gold bounce. You might, you know, I'm looking at pairs like, and I know there's a reason why the dollar Canadian and dollar peso are going higher. You know, there's a lot of comments about trade and lumber and you know, Mexico, the wall, blah 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 blah, all that stuff. But those are also very much they tend to strengthen, or, you know, the commodity currencies tend to sell off during periods of risk aversion. So if the stock market starts to show some signs of reversal later today, I think you have to keep a real close eye on the dollar Canadian, which, by the way, if you guys are not aware, I'm going to give away some of the ForexAnalytix analysis right now, but we're at a 50% retracement and we're at major resistance on the dollar Canadian. If we snap this 136, I know we're trading at it right now, we've been slightly above it, but if we get a good foothold above 136, we could be trading at 140 pretty quickly in the next, week or two. And the US dollar Mexican peso is showing a lot of signs of reversal. I bought this last night. I bought it actually 3 times. I bought this thing 3 times over the last 24 hours. So I bought it yesterday here, sold it here, bought it again here, sold it there, bought it again last night at 74, sold it this morning at 84 before we broke out. So I already got out before we did this. But it's starting to show signs of life and reversal. So guys, these are the types of things that will blow higher if the stock market shows some weakness. I hope the market shows some weakness because I really want to get long the dollar peso for a move back up.
It looks real this time, buddy.
Yeah, it does. It looks like we're going to like 1920, 1930,
yeah.
maybe all the way up to 20 again. These are the things that I'm keeping an eye on, and I'm definitely going to focus on after I get an old-fashioned donut at my kid's school. So you guys have a great one. Thank you guys for thanks for having me, Dale and Steve.
Right,
I know Stelios is joining you too. So you guys have a great one. I'm gonna switch it back over to you. Thanks everybody. Have a great day with you guys. Thank you.
Have a donut for me too, Blake.
I definitely can only have one.
All right.
Ahead of my trip to Mexico, I can only have one. All right. See you guys.
All right,
Thank
buddy.
You. Bye.
So, Stephen, Turnaround Tuesday, you ask and you receive. So you're asking about some Turnaround Tuesday, any pairs. There you go. Blake gave it to you on the way out. Okay.
Dale, I also have some interesting setups to...
I just wanted to do one, Steve. I promised everyone I'd show them a potential 3 drive. And,
of course. I'll be here anyhow.
And this lines up with what Blake was talking about with Canada. One of the weakest sectors of this rally in the S&Ps, and, to me it looks like we're going to blow to new highs, okay, because we had that confirmed high in the S&Ps. And one of the weakest sectors has been oil, okay, the techs are blowing, everything's blowing, the banks rebounded, consumer discretionary, everything in the S&Ps is kicking in gear except oil shares. They're down on the quarter. So Stelios was talking about a fundamental case for crude. So I started paying attention to it. And this is potentially setting up a 3 drive to a bottom formation. So for those of you that are not familiar with it, it's not just the form of this wedge line and 3rd drive here. It's the RSI pattern that's important. So normally this is how it goes. Here's your first drive. Everyone with me? Give me a Y if you see the first drive where my cursor is. Just a little education here today. All right, so on this drive, everyone see the RSI reading? It was 17. That's a very intense selling reading there. Very intense, anything under 20. So we had our bounce, right? And then we made new lows. This is our 2nd drive. Everyone see this? Still weak, but at least 20. Okay, so there is divergence, but it's not ideal to me. I like the final drive to be over 30 for a 30 reading. So actually, there's a harmonic from 49, but I want to see where the RSI is. Should we break maybe another 80 cents in the next 24 hours? And if the RSI is higher than this one, you go with the first green candle, reversal off the 3rd drive line. And I'm not looking for anything major. Maybe rally back to 51. This is just my analysis off a 3rd drive. Everyone with me? Maybe 1.5. So after I'm through with this, everyone understand the 3rd drive now? 3 drive to a bottom formation. This is not the strongest pattern because sometimes you get a couple of readings over 30 this is still a pretty weak pattern because the divergence, I like to have the second divergence over 30, not at 20, but this was so intense. But I'll go with it as long as we're, you know, higher than this reading at new lows, which is 25. If it's under 25, I'm not going to mess with it. Everyone with me? So for now, if the trade is successful, and you also have to be aware that sometimes you get throw unders, it could break under this wedge line. If that happens, then you wait for it to be back inside the formation. But for now, I'd just be looking for a rally back to maybe this high or this high from the lows. And I think we'll get a pop in the oil shares so they finally participate. They're a big part of the S&P 500 oil shares. So this is your lesson in a possible three drive to a bottom formation with the RSI structure underneath it. And this is my gift to you for people that haven't seen it before. Everyone understand it? It's okay if you don't. I'll go over it again with you. I know this isn't exactly part of the service, but what the heck. I've seen this help a lot of people. I know a lot of people that look for three drives now and that kind of RSI setup. So if I'm right and we get a bounce down here in crude, that may set up the pullback that some of you guys are looking for in Canada. It's great when they all confirm, you know. You're gonna get divergence first on longer term stuff, and then you could dial down. Sometimes I'll even dial down till I'll be to the 15-minute. Okay, so you know, like, what's a 15-minute look like here? It looks actually a little healthier. The shorter term ones look healthier. See, this reading here was 23, 31. So this may stay above 30 down here. Anyway, you guys get the picture. And I was thinking about this position mentality like Blake has. And you may want to write this down. Do the right thing today, and tomorrow will take care of itself. Do the right thing today, and tomorrow will take care of itself. Okay, guys, I'm going to turn it over to Steve now. Steve has some setups here.
Okay, I think it's a good opportunity, Dale, since you mentioned it, if we start from having a look at crude. Because I agree with you. I'll show you exactly why.
Yeah, there's a 200-day there too, right, Steve?
More than that. I'll show you. Give me the screen and I'll show you actually. We have just entered a very, very interesting zone for a possible bounce.
Okay.
I think you gave it to Stelios, by the way.
Oh, did I? Okay.
Yeah, you've given it to me, Dale. Pass it over to Steve.
Okay. There you go, buddy.
Well,
you guys should not have had the same first name and been in business together.
Which screen am I sharing actually?
You're showing the traffic light page.
Okay.
The analysis page.
Yeah.
So let me bring this here because I did it by mistake. Okay. Anyhow, I moved it to another screen. So this is oil actually. This is crude. Okay. First of all, as you see, we have a very, very interesting ascending trend line support. We've tested it once, twice, 3, 4 times. This currently passes a little bit higher than 48. I know that's, you know, almost $1 lower, but that's not the only thing we have here. We have the 78.6 fib at 48.50 from this move, from the highs.
That's where my line is. The line's right around there, 850, 830.
We also have the 200 DMA, as you mentioned, that we're currently testing. And we also have the 50% fib from this move higher, which is exactly in the middle of this horizontal zone I've marked, which is, let's say, 48.80. So we also have 7 out of the last 8 days are down days. I mean, this should at least soon enough yield some kind of a rebound. So we are actually entering a zone of roughly 80 cents worth of zone that can produce a rebound. So let's take it oppositely. A risk reward of being short at current levels makes absolutely no sense. So if you are short and you are in profit, I think that I would consider, if I was you, that this is a nice opportunity to book some of them at least. Being short here makes, in my opinion, no sense. And as I said, if you can define well your risk reward, I think that a stab to the upside is definitely worth considering. So I didn't want to show oil, but since you were talking about it, I wanted to have a look at it. Now, we talked briefly yesterday about the kiwi. You remember that I showed you this triangle that we were testing resistance. As you see, it actually worked. I told you that I have no position in that because I thought there are better opportunities out there, and I'll show you exactly what I meant. So we've obviously been rejected by this line. Now we know where support is. Support is roughly here at this trend line support. A break below it, and especially a break below this zone makes things very, very hard for Kiwi bulls.
Yeah, like 65, huh?
Yeah, easily. A fast look at the Aussie as well, just because we talked about them yesterday. As you see, we indeed had a false break higher yesterday. You remember that we said that we actually opened the day above it, but we were currently below it. We closed, barely below it, and you see what happened today. Again, though, I have to say that you cannot be outright bearish Aussie unless we break this support zone, or at least roughly the 0.7450 level, because somebody can say that, the pair is coiling above, let's say, 0.7450 for another drive higher. I have no positions here because I see no clear setups. I know where the resistance and the support zones are, but we can talk about other pairs that include the Aussie and the Euro that are extremely appealing. Actually, for whoever is watching next week's videos that we post every Sunday, like almost always Blake is doing those, but I had to do one of those like roughly a month ago because Blake was...
where you were bearish $1.
Where I was actually beginning the video by saying that this is not the point to be. It was actually after the ECB meeting. And I was saying that it's not anymore the time to be bearish Euro because there are a lot of Euro pairs that are showing the potential to see some strength, and that it's not anymore the time to be looking lower for the Euro. As you see, it took roughly a month to manifest, but let's go over some Euro setups that I did back then as well. This is Euro Kiwi. I mean, you can't get more clear technical picture than this. We have a descending wedge. We had been respecting this descending wedge since July 2016. We had a clear break higher, which also coincided with a horizontal zone around let's call it 148.50. We had an impulsive move higher, and then what did we get? We got a pennant. I mean, you can also find it in our educational part of the website.
A wedge and a wedge.
Yeah, this is a pennant actually because it's a continuation pattern.
Right.
It's like a bull flag. A pennant is actually a bull flag, but the lines are not parallel. They are triangular, and that's what we got here. So look at this. I mean, a clear runaway gap above it. Now, what is the target for this pennant? As you see, I've already done this. The target is a little bit higher than 160. And if you zoom out at the chart, you can see we had 2 lows here and 1 high here. So I would say that, and the 38.2 from the highs. So I would say that somewhere between 160 to 161, we have a high possibility of actually getting there. Will we get there straightforward? No, it's not a slam dunk. if you're not involved in this, I would definitely say that any dip back to 154.50, somewhere here, 154.80 is an excellent place. Let me also...
Yeah, they shouldn't fill that gap for it to get to targets.
This area.
Yeah, should not fill it.
Yeah, so something like this, right? Quite possible. Okay, so Euro Kiwi, quite clear. Euro Aussie.
Yeah.
Just look at this.
Just starting.
Exactly. Just look at this. It's huge, as Trump would say. It's gigantic.
It's going up big league.
Yeah, so we have this huge horizontal zone that coincides with this descending line, this descending trend line, and we're currently about to pick above it. I don't need to explain the ramifications of what a confirmed break above this can do. I mean, we can easily get 1,000 pips to trade 1,000 pips higher within, you know, a few weeks. So this is also an excellent setup, and it's actually, if it plays out, it's, as you mentioned, at its infancy, how it's called. Yeah, you know, it's infant. It's in infant state. I mean, we're just breaking out. We're just breaking out.
It's only an embryo.
Exactly. Eurocad. This is one of the pairs I had gone over. We had this triangle, a well-defined range as well. We broke above it. We broke back below it, so it's not so clean. But what is actually quite clear is that this move higher was more or less impulsive. We had a move lower in 3 waves, A, B, C. You can't get a clearer ABC than this.
Yeah.
A, B, C, and look what we got now. This seems to be clearly impulsive. I mean, look at this gap higher. We didn't even manage to retrace back to close the gap.
No.
Important level here at 149.60. I have to admit though, this pair I like for higher as well. There is no risk reward at the moment here. I mean, no risk reward. I mean, if you're not involved, if you were not involved after this dip, you know, obviously, if I went ahead and told you this is a good place to buy, you know, I would be lying. Because, okay, let's say you go ahead and buy it. There is a good chance you're going to make money, but where would you place your stop loss? That's something we always have to consider while trading, right?
So basically, the theme is all the Euro crosses look great.
Yes, and as I said, I'm not saying this to say, oh, I told you so or whatever. We saw the first signs, we saw the first indications after the ECB meeting. And you see how it is. That's why you have to be patient with trading. You first get a macro seed. You know, it's like you plant a seed in the, in the soil, you know, and then what happens? You need some kind of triggering factor, and voila! Look at euro. Look at euro yen. I mean, this is amazing. We've already traveled, like, what is it? 560 pips within 2 days.
Most of it in 2 days. Most of it in 2 days. Yeah.
By the way, look at the area we're currently testing. This is obviously a good area for a pullback. Now, as I said yesterday, somebody could go ahead and say, yeah, but look at this. You still have lower lows. Yes, you do still have lower lows, but look at this move. This move looks impulsive. I mean, as I said yesterday, any dip that looks like bottoming, after some consolidation, etc., personally, I'm going to try to get aligned with what I consider now to be the trend, because you remember that we had drawn this line together, Dale, this huge channel resistance that we retested. So somebody can say, yeah, but it's bearish, but I am going to go ahead and tell you, yes, but we've broken out of this channel, we've gone ahead and retested the channel, so depends. Are we bearish? Depends on if you want to see the big picture or the short-term picture. So it depends on what kind of trading you want to do, right?
Yeah, I went short it here.
Let's look at a few more pairs. Euro MXN. Look at this. Back above the zone, back above this trend line, a dip somewhere at 2020, probably a good opportunity as well. And I know that I'm going to hurt the feelings of my friend Stelios. I actually was talking about it with him on Thursday, if I remember right. Am I right, Stelios? Was it Thursday we had this discussion? Yeah, he said that
you are right.
yeah, he said that he liked NOK, and I told him I agree with you, but depends against which pair. And I told him that, listen, I know your position about Euro NOK, but look at this. Back then we were somewhere here. So I told him, look at this. We seem like we want to break. Oops, sorry. Actually, that was a mistake. I told him, listen, we look like we want to break above this trend line, and actually we did it. So would I be short Euro NOK at the moment? Not 1 in a million. Not 1 in a million. Actually, any dip to retest this trend line is probably a good buying opportunity. And since we went on having a look at exotic pairs like the NOK, let's also have a fast look at GBP NOK. I haven't had a look at it until we also talked about it with Stelios on Thursday, but we can go ahead and do it now.
Let me know when you're done, and I'm going to make a comment afterwards.
Of course. Look at this, GBP NOK. Triangle. We broke comfortably above the triangle. Descending trend line. This actually was an amazing break. Why? Because we had the confluence, almost the confluence of the 200 EMA, the descending trend line, and the triangle trend line. So this is also a clean break. Anyhow, as you saw, I wanted to focus more on the euro pairs, so this is, outside that. But, I'm now reiterating exactly, I think almost a month afterwards, that euro does not look to be a pair you want to be short at the moment. Personally, I'm not. I have some long exposure in some euro pairs, and I'm not looking to be short the euro. Euro USD, we already gone it through yesterday, and I think everybody's seeing this setup. The break above the triangle, we currently seem to be consolidating about the above the triangle and the 200 DMA. As usually, those kind of moves after a big gap, this is a consolidation. If I had to bet where the next move is going to be, it's going to be higher. I'm long Euro USD, by the way, for full disclosure. So those were.
I buy a break to 7.5 for the next push, if offered.
Oh, sure. We'll see.
Yeah.
That's why we always have two-way markets, my friend, right?
Yeah.
Can I say something now?
Of course.
Yeah, go ahead.
It's yours now, mate.
No, absolutely. No, obviously, I agree with a lot of things you say, and technically, the euro is actually looking very good. I will not deny that. The question we need to ask ourselves at this moment is why, what's brought this big push higher to the euro? And, obviously, a big part of it is the first round of election result in France and all that. And
if I may interrupt you for a second, Stilio, my thesis is that the seeds for this move higher were not set by the French elections. That was actually the trigger. The seeds were set by the slight shift of the ECB, probably towards more hawkishness.
Yeah, no, understood. I understand that you did say this. You did say this about a month ago. I remember it. So I'm not contesting that. I'm just saying, if we take a step back and you look at Europe, and you look at what's happening in Europe, it boggles the mind sometimes when I think that it's considered nowadays a success when a far right party doesn't win an election and comes second. And it's becoming a more frequent occurrence in Europe. You got Netherlands, you got Austria coming up, you got France. It's not, the world is changing, and it's definitely not something that you can look at and say, oh yeah, things are great. I personally don't think things are great in Europe, and I live in a European country, and I I don't like the situation where the market goes ahead of itself, prices something completely one way. Like, for example, at this moment, what do we think is priced in for Macron winning the elections? I would say over 90%. So when something like that happens, and I think the latest polls have him 60-40 in the second round.
61, 39, 60, 40,
yeah,
62, 48. Yeah.
Yeah, 60-40. You know, it's a big gap. It's a big gap. It's a high probability event. But, you know, we've seen things turn around, and it's not, you know, it's something that's doable. I don't think it will be done, and I don't think it should be, but it could be. So in my gut is telling me here, you know, risk reward being long euro the next 12 days, I really, really don't like it. But as you said before, you know, there's all these, you know, technically the euro looks strong. So what happens if Macron wins the election? You know, what's going to give the euro the next push higher? That's a question. So, you know, I don't know. I'm a bit scared of the euro at the moment, and I have been, and obviously I haven't been right on it. So my euro NOK shorts is not working. My euro sterling short is working because I shorted from higher than here, but again, I'm giving some of it back the last few days. So I'm just a little bit worried. You know, I'm a little bit worried ahead of the second round, and I'm a little bit worried overall because Europe has a lot of structural problems that, you know, are not. I'm not. You know, how do you deal with Italy? You know, how do you deal with things like that? It's a big. You know, there's some big problems out there that have to be addressed. So I'm not.
I agree with you. I totally agree with you. But you know, something that's it's one of the things, you know, we've been often saying to, you know, to clients as well, and you know, to people that ask the question is, you know, I've gotten used to being also a technical trader. I've gotten used to the market ignoring important stuff for long periods of time. Extend and pretend, kicking down the can, you can call it as you wish. We've seen it happen so many times. And, you know, the market has shown amazing capacity over the years to do that for way longer periods of time than somebody would assume.
Yeah.
You know, guys, just a thought in here that this euro rally could just be a function of big money driving it up to squeeze every last euro bear out of the trade, and so that they could begin to distribute up around 113, 115, because then the fundamental realities may kick in the second half of the year.
Yes, okay, that could be the case. But for example, let's take the DAX. You remember that I was short the DAX up here because I believed, and I still believe, that there is a good trade perhaps here because we're retesting the, you know, this trend line as well. I mean, if you have a good risk reward, you can be wrong, but still not lose money, because that's why we are traders. You know what I mean? You define a setup. You are hoping that you're getting a reversal in your hand. But even due to technical factors, you just get a pullback, you're already in the money, you can already trail your entry to stop, to break even, or even...
I like that, hey Steve, I like that the reading is 68 at the last time.
Me too. Just look at this. We're still diverging.
This is daily.
Yes, we're still diverging. And you remember back then when I showed to people the DAX ascending wedge, what did I say? Catching reversals at strong trends is not something that you will manage to do 1 out of 2 times. I'm not saying 100% of the times. I would be crazy to even mention it. You might manage to do it 1 out of 3 times, 1 out of 4 times. But if you're looking at a risk reward of 5 to 1, 6 to 1, 7 to 1, depends, you don't care about it. You know what I mean? As long as you have the mental capacity to follow your system and say, what kind of trade am I looking to take here? I'm trying to fade the trend. I'm trying to catch a reversal. How often does that happen? Not very often. Am I okay with losing 3 times my defined risk and making 6 times that in the 4th time? If you can do that and follow your method, go ahead and do it. If you can't, because after losing 2 times, you know, your defined, let's say, risk, you say, oh shit, this isn't working. I mean, I should stop doing this. and you see the third or the fourth time this working, and that would have actually made your losses 3-4 times back, you know, that's how you do trading. You put rules on the table and you say, for these kind of trades, those are the rules I'm going to follow. If you have the capacity to do it, go ahead and do it. If not, then this is not the kind of trading you wish to do. Perhaps you will become an excellent trend trader. You know, a person that looks at a good, well-defined trend and says, okay, every pullback at a decent level, I'm going to buy it. Sure, the risk reward you will be aiming for is less, but you will be right more times. Right, Dale?
I'm with you, buddy.
from some distance from what I say, yes.
No, I agree, absolutely, Steve.
Okay, so yeah, this is DAX. Personally, for full disclosure, I just entered DAX short again. I like today's candle, and I'm giving it a second stab. So
Hey, let's see an hourly on it, Steve.
Sure.
See what the RSI structure is on it.
Although that's not my kind of way, but
I know.
Let's go to the 4 hour.
But it's nice when the shorter term stuff also lines up.
Okay, I'm going to show you a 4 hour chart because let's be honest,
Right.
I don't even have hourly charts.
Okay, that's okay. Okay, that's good.
Yeah, I mean, it's not my style. Yeah, here as well, if you see, if we draw a line, obviously, let me pull magnet off. If we draw a line here, you can also see.
Yeah. The RSI is kind of confirming up here. It can do some work, pull back, and then drive up there. You know, sometimes, you know, let's face it, these have been prolific bull markets, correct?
Oh, no questions about it.
So they don't turn on a dime. It takes institutions a long time to shift positions. It's like turning a battleship around.
Here you have.
Not like your Ferrari making a U-turn.
By the way, as you see, we have a channel here, and we're currently testing channel resistance, right?
Yeah.
So let's start by going the opposite way. Would you be buying DAX here?
No.
Where would you put your stop loss? Let's say that you believe it's going to move higher. It's likely. Would you be buying here? Where would you put your stop loss? And what would your risk reward be?
Yeah, you'd have to go like around 11.9 or something, or the gap being filled, or the green moving average, or just use a money stop.
Exactly,
or just a money stop.
Exactly, and this also bodes well with possible euro weakness because euro strength, because as everybody knows, a stronger euro will not benefit the DAX at the moment, right? I mean, they are most of the times inversely correlated.
Yeah, true. Another good point.
Yeah. So this is my whole view on the euro ecosystem at the moment. And as I told you, we have it also on video. I believe that the first steps were had already started being taken a month ago, and I think it's now paying dividends.
I'll tell you what, man. Great analysis, Steve.
Oh, thank you.
Really nice job. You know, it makes me feel like singing.
Here it comes.
If you're looking for a great place to trade, come and join us in FACE. Don't isolate, collaborate with traders that are as good as you or are great in FACE. Good job, Steve. I'm sure glad you're back from vacation. Don't leave.
I promise.
Members, do you love FACE? Ever get better analysis any other place? Give me an F, an A, a C. FACE is your place to become an ace. Anyone would like my CD sent out to them?
Yes, please, man.
Huh?
I want a few copies, please. Absolutely.
All right. Well, you know what? I got a screenshot. I'm going to take over the screen.
Yes, go ahead and do that. I know that you have an excellent. I know that you have an excellent guest for today, so people should stick around.
No, I don't. I don't have a guest.
Oh, was it for tomorrow? What did you?
Yeah, Mark Chandler is going to be with us tomorrow.
Ah, tomorrow. Yes. Sorry.
Yes, Mark Chandler, and then Mark Newton, who gets a lot of time on CNBC, is going to be with us on Thursday. A very good and technical guy. Yeah. So guys, we have the crude setting up, so start eyeballing it when it gets down to 8.5. You've seen all of Steve's calls. I did have a look, a chart share, I think by a new member. I think I invited, who was it again? It's a Pitchfork guy. Hi, Calvin, how are you? Shinten Patel. Nice to meet you, Shinten. All right, so we're working right here on resistance. And the Pitchfork, wow. This is Euro Aussie. Yeah, a lot of upside. Very nice Pitchfork work. Thank you very much. Welcome to Face, Shinten. Am I pronouncing your name right? Okay. Appreciate it. Any other looks? I think that Dan had a good point. I'm just going to scroll back a little bit. And Tolson saying that gold is the new VIX. Well, then I think you're going to be able to buy protection cheaper. So Dan saying CAD yen is held up nice today given the CAD weakness. If oil is to pop, this might be a pair to watch. Gold is not moving the way it should. I guess the guys long the market are rebuying. Oh, okay, I see. So CAD yen is something that Dan Norberg is noticing. Let's take a look. Yeah, CAD yen. Yeah, it's a negative view. It's probably one of the only negative looking ones. Looks negative. Thank you, Dan. Any other shares before we wrap it up today? Comments, questions? Is there a risk to close the gap on the Euro Aussie? Let me look. There's always risk to fill gaps, but that's how you manage the risk on it. Because if it's a breakaway gap, it shouldn't be filled. If it's an area gap, it should be filled. Where the hell is it? I don't see your Aussie here. Let me look here. Maybe Steve has it.
Gap at euros is at 142.8.
I got it now.
And,
are you talking about this gap? I doubt it. I doubt it. You know, you do have a two driver here, but a lot of momentum. I would think that if you like the trade, you get on board around 3.5. And it should not close that gap at 42, in my humble opinion. And gold, Ash is asking about gold.
I'm negative. Blake showed it right at support. The gold.
Blake actually at next week's video stressed out that gold was exactly at resistance and the risk reward is being short, but he also explained that, you know, if the French elections went the wrong way, people being short would be slaughtered.
Well, I think that we're starting to look at a descending triangle at this support level right here. So this to me looks like an important make a stand goal, but it's starting to look like I'd sell any rallies back to 1280. I don't like it. It probably doesn't bottom until the stock market's done with whatever it's going to do. All right, so you have a lot of confluence here. Silver, I actually had the weaker pattern. I was more negative silver last week, and silver really looks ugly to me. Okay, first we broke the rising wedge I talked about last week from up here, and we did retrace 100% of the move, right? Just like my theory on rising and falling wedges, here was the wedge, right? So the objective was 100% retracement. We got it. I have a hard time selling into the hole. I almost think that there could be a rally, maybe some type of ABC, but silver still looks negative to me, and so does gold. Sell big rallies. I hope that hurt. I hope that helps, Ash. That help? That's my view. Probably maybe into June, time-wise. Okay? So that could be a wrap for me, Steve or Stelios. Anything else that you guys want to talk about? We have Mark Chandler tomorrow.
Oh, I think we went over, you know, the most important stuff.
Yeah.
Yeah, I think so too. I think it was a productive session. We got a lot of ideas from Blake, a couple from me, a lot from Steve and Stelios. And don't forget to go to your, you know, also the WTI that I was talking about on FA. So we're right here at the 200-day. That's something that Steve showed. But there was also a harmonic pattern here.
By the way, Blake, so sorry, Dale, so I don't forget, we've also said it in the past, ForexAnalytix has a lot of parts that that are free even for non-subscribers. One of them is our education section. So for any friend that is, I'm going to send it now on the questions. So for any friend that is new to trading or whatever, they can definitely visit and have a look at technical patterns there on all the types of analysis we cover. Be it candlestick, basic technical analysis, harmonics, Elliott waves, etc. I just put a link down for whoever wants to visit it.
Okay, and also the redemption program with the brokers. Probably many members not aware of it, that if they have an account with on that one page and they trade enough, they could have their subscription paid for. I heard we're getting a few.
Yes, we've already had people subscribe to it, and also our blog part of the site, which is, you know, every week, every couple of weeks, depends on how things are moving. You know, we post some kind of a blog post. You know, very often those are also being published by Business Insider and, you know, other credited you know, sources, and it's worth having a look. And by the way, the latest blog post there is now, let's remind to our friends, the giveaway we're running, exactly. So please send us your trading setups, whatever kind of computer screens, whatever you use. We've already received.
I tried, Steve. I tried yesterday, but the mice that run around in a cage that generate electricity for me, they're very they're very camera shy.
Yeah, I know exactly what you mean.
All right, so also I just wanted to wrap it. So Nick has a harmonic pattern here in WTI, around 49, kind of looking for the same type of bounce that I think we could get from this area. So that's only one trade. I want to leave you with this. Don't make any one trade too important to you. It's just another trade. If you feel that it's too important, the outcome, you have too much on. All right, so it should just be another trade. You know, you're winning or learning, and you don't dwell on your losers. You may want to look at how it happened, journal. But like all great athletes, when they make an error, a mistake, an interception, they say next. So I want to thank everyone for their attention today. It's our mission here at ForexAnalytix to build up and edify traders every day. I hope we accomplish that again today, because that's our goal every time we open up this live room. I believe we have the best content on the net. I don't think you're going to find many places where you have a guy like Blake and Steve and Stelios and Nick, and even I think Grega was in the house today. Maybe Grega, we can get him to show a few things.
Grega was a little bit preoccupied this week with some company stuff, but he promised that by the end of the week he should be done with them. So we will definitely have him.
Okay, cool. You know, tell him Friday would be great, because I don't have anyone booked Friday.
Yes,
but
fine.
it doesn't matter. It doesn't matter. Anyway, look at this, Steve. Ben Morgan said it was a wonderful session. So thank you, Ben. I'm glad it's adding value to what you're trying to accomplish. So I'll leave you with this. Don't just count your pips, count your blessings. And trading is what we do. It's not who we are. And thank you for hanging out with us today. Thank you, Steve, for your great technical work today. I'll thank Blake. Well, I'm thanking Blake in absentia, as he has donut crumbs all over his lap, most likely. And Stelios, thank you for being a counter voice to Steve's euphoria over the euro, because, you know, there's always two sides to a coin, right? My trading warrior brothers, always two sides to a coin.
Absolutely, absolutely.
So guys, enjoy your day, enjoy spring. Summer's around the corner, and I'll see everyone tomorrow.